Fixing the monetary system. The monetary system assumes money makes money. Well, it doesn't. Tomorrow's system will be built on democratic money or electronic cash, where everyone pays the same for a dollar and everyone gets the same value from a dollar. In other words, money doesn't make money. Money exchanges that value. Today, governments license banks to create money with loans. Tomorrow, governments will stop banks from creating money and allow communities to generate money with loans to the community. What is wrong with banks creating money? Banks have different rules for the rich and a different set for the poor. The rich pay less for money and get more for each dollar they spend. It all starts with creating money. Banks create a loan account and enter an amount, this red amount here. At the same time, they put new government money into the borrower's trading account, this money over here. The money going into the trading account is new money, and as some people say, it comes out of thin air and costs nothing to produce. Later, the bank increases the loan account by interest and fees that you owe and adds the money to the loan account. It then creates new money, but instead of putting it into your trading account, it puts it into its own capital account. It gives itself a capital gain and expects you to pay for its capital gain in the future. Don't believe me? Go and check your loan or credit card account. Banks debit loan accounts with fees and interest you owe and do not credit your trading account. I call this legalized theft because they don't do it for the wealthy. They have different rules for the wealthy. The next part of this story shows why this is bad for society. The great thing about loans is that money is created to build an asset, and then the money is destroyed, except with capital gains. The capital gain is not destroyed, and more money is created than is needed to create the asset. The capital gain increases the money supply, and an increase in the money supply without a corresponding increase in assets to sell causes inflation or reduces productivity, or as in the case in Australia, both. To repeat, the double payment of interest creates extra money that is left in the economy. The extra money does not create extra value. The productivity increase is reduced by the amount, and if it becomes negative, it causes inflation. So, what is the solution? Electronic money should be the same as cash. Everyone should pay the same amount for money and buy the same value with the same money. Banks should remain as they are, but they should stop increasing the money supply with loans because they are not to be trusted. Banks should deal with money that already exists, as that is harder to cheat on. Governments should entrust community groups with the responsibility of increasing the money supply by buying or building community-owned assets. The Reserve Bank should advise the government on how much new money should be introduced for our community assets to maintain zero inflation and electronic money the same as cash. Well, what can you do to make this happen? You can lobby every politician you find to stop banks charging interest twice. It's pretty clear what they're doing, and it's not fair and it's not right, and the wealthy don't pay interest twice. They have commercial in confidence rules that allow banks to collect their capital gain and in some cases collect another capital gain for themselves and in extreme cases never pay back the original loan. The banks allow the rich, especially people like fossil fuel companies, to get loans they never pay back, from which they collect capital gains and reduce their taxes. Even worse, the government gives them money to explore and find new resources. But what else can you do? Well, you can form a community of homeowners, renters and investors and democratise existing assets and money for yourself. The existing money comes from your house assets and mortgages, and you put them all in a closed, permanent housing market where houses can come and go out of the market. People can come and go out of the market, but the houses and the assets remain, and you can organise the funds as permanent democratic money. Everyone will pay the same for the same house and get the same investment return from using existing money. So to summarise, complain to your bank in writing and ask them to stop debiting your loan account with interest and fees. If they refuse, you can take the matter to the Australian Financial Complaints Authority. Write to all your political representatives and ask them to stop the banks taking a capital gain on government money. Organise your neighbours or family and start your own permanent housing market or any other asset you currently hold. Send me your experience and I will collate them and report back to you. My contacts are here and you can read those articles on Medium for further information. Thank you.